Hello everyone, and welcome to a new episode of Geopolitics and Money. Today, we are going to talk about the record amounts of gold recently purchased by central banks all over the world. Let's get started. There's some really interesting stuff happening in the gold market right now that people should pay attention to because it could have implications for the global monetary system. Central banks are currently purchasing gold at the highest rate since 1967. Analysts believe that China and Russia are significant buyers, possibly as a way to diversify their reserves away from the US dollar. This trend suggests that some nations are seeking to protect their reserves against potential risk by investing in gold. Bloomberg reports the People's Bank of China raised its holdings by 32 tons in November from the month before, according to data on its website. That brought its total to 1,980 tons, the sixth biggest central bank bullion hoard in the world. There has been much speculation in the gold industry regarding the central banks that were responsible for the purchase of nearly 400 tons of sovereign gold during the third quarter. While only about 25% of these purchases were publicly reported at the time, market watchers have suggested that China and Russia may have been among the buyers. China's desire to find alternatives to the dominant US dollar and its reserves has grown in recent times due to rising tensions between the two countries. These tensions have been exacerbated by measures taken against Chinese semiconductor firms. Additionally, Russia's invasion of Ukraine has shown that the US is willing to impose sanctions on central bank reserves, further driving the need for China to diversify its reserve currencies. In the past, China has gone extended periods without disclosing any changes in its gold holdings. The last update was in mid-2015, when the central bank announced that its reserves had increased by 57% to 53.3 million ounces. This was the first update in 6 years. From the end of October 2016 to December 2018, China did not report any gold purchases. Although central bank purchases of gold do not typically lead to sustained rallies, they can provide support during times of declining gold prices. The precious metal has faced downward pressure this year due to the Federal Reserve's tightening of monetary policy. However, gold has remained relatively stable compared to changes in the value of the US dollar and Treasury yields. But it's not just China. It's also countries like Qatar, Turkey, India, and Kazakhstan. These are all countries that have shown interest in joining BRICS, a corporation of 5 major emerging economies: Brazil, Russia, India, China, and South Africa. In October 2022, central banks added a further net 31 tons of gold to global international reserves. The Central Bank of the UAE was the largest buyer during that month, adding just over 9 tons to its gold reserves. The Central Bank of Turkey also bought 9 tons of gold in October. Other notable buyers were Uzbekistan 9 tons, Kazakhstan 3 tons, India and Qatar 1 ton. However, one country has been way ahead of the pack: Russia. It has been accumulating gold rapidly since the sanctions imposed in response to their 2014 intervention in Ukraine. They appeared to hit their target in the month prior to their 2022 intervention. Sanctions have caused significant challenges for Russia's gold mining industry, the second largest in the world, in terms of selling its products overseas. The industry produces about 300 tons of gold annually, but the domestic market can only absorb about 50 tons, according to MKS PAMP, a precious metals trading company. In addition, Western governments have frozen approximately $300 billion of Russia's foreign currency reserves through sanctions, leading other nations to question the security of having significant dollar exposure, given the potential for confiscation by the US and Western governments. Russia's gold purchases are similar to South Africa's strategy during the apartheid-era sanctions of supporting its domestic mining industry by using local currency to buy gold. The Central Bank of Russia stopped reporting monthly numbers on its reserves soon after the 2022 war began. CBR officials have rejected the suggestion it is buying gold. Our gold and foreign exchange reserves are sufficient. We don't have a specific task of accumulating gold and foreign exchange reserves, said CBR Governor Elvira Nabiullina in mid-December. Central bank purchases of gold at the current scale have not been seen since 1967, when European central banks bought large quantities of gold from the US. This led to a surge in gold prices and the collapse of the London Gold Pool of reserves, which was a turning point in the global monetary system. The events of 1967 ultimately contributed to the demise of the Bretton Woods system, which linked the value of the US dollar to gold. Within 4 years of this run on gold, Bretton Woods had collapsed. The current global economic system, which is based on the US dollar, is not backed by any physical asset, unlike the system in 1967, when a run on gold had a direct impact on the global monetary system. However, it is still possible that increased central bank purchases of gold could serve as a leading indicator for future economic trends. In 1967, there were no alternative systems to the Bretton Woods system. Today, however, there are open discussions about challenges to the current US dollar-based system. Many countries are concerned that using the US dollar as their primary reserve currency leaves them vulnerable to financial warfare by the United States. Marcos Fernandez, a researcher at Tricontinental Institute for Social Research, says the BRICS group of nations needs to focus on creating an alternative to the US dollar's hegemony in global transactions, which gives Washington leverage over its opponents. He continues, after reserves and assets worth tens of billions of dollars were confiscated from countries like Venezuela, Iran, and Afghanistan, the US and EU decision to freeze Russian reserves worth over $300 billion raised alarms all over the world, underscoring the need to find an alternative to the dollar's dominance. The value of a currency is based on trust. If the use of a particular currency is influenced by external factors, such as a country's foreign policy, then the risk of using that currency increases significantly. When trust in a currency is lost, its value can also decrease. It is not yet clear whether the recent surge in central bank purchases of gold was a one-time event spurred by lower gold prices, or if it represents a more significant shift in investment patterns. This will likely become clearer in the coming months. According to Bernard Dada, a senior commodities analyst at Natixis, the French investment bank, the trend of central banks outside the West seeking to diversify away from the US dollar due to deglobalization and geopolitical tensions is likely to continue for at least the next decade. But it's worth watching these developments as the US played their hand with the Russian reserves and now everyone else is reacting. We here at Geopolitics and Money will follow these developments closely and update you as soon as possible. Let us know in the comments below how you think this geopolitical game will play out, and be sure to subscribe to this channel so you'll be notified whenever a new episode gets published. Thanks for watching.